Billions and billions and billions of dollars. That's how much is about to disappear from the Bitcoin market very, very soon. Not slowly, not gradually, all at once in a single moment on December 26th. And when it does, that invisible force that's been holding Bitcoin in place right now will finally go away. Most people have no idea this is even happening. They'll be too busy recovering from their Christmas feast, with Boxing Day shopping, or planning their New Year's parties. But the market is about to completely change, and if you don't understand why, you're going to be confused when everything suddenly shifts. In this video, I'm going to show you exactly what's going on behind the scenes. We're talking about one of the largest Bitcoin options expiries in crypto history. Billions of dollars in positions are closing all at the same time. This single moment could completely reshape how the market moves and set up the biggest bull run in crypto history. You can feel the tension right now, can't you? The price feels stuck, like nothing's really happening. But behind the scenes, there are forces building that most people have absolutely no idea about. The Binance founder CZ says there may be a crypto super cycle next year, but you're not taking it seriously enough. Today, I'm going to pull back the curtain and show you exactly what's going on. We'll break down why Bitcoin has felt so quiet and stuck in this range lately, what these hidden forces actually are, and why this expiry could flip everything. I'll walk you through it step by step with simple examples, so even if you're brand new to this, you'll understand it clearly. We'll look at how this has played out in the past, what the data is showing right now, and why so many smart people are paying close attention. Before we start, I'm not a financial advisor, and this isn't financial advice. Crypto is high risk, so always do your own research and treat this content as pure education to help you understand the crypto space better. Alright, let's start with the basics. Have you ever noticed how sometimes Bitcoin moves freely with big swings up or down, and other times it just sits there in a tight range, bouncing back and forth like it's glued in place? A huge part of that comes down to something called options. Think of options as timed bets on where the price will go. A call option is a bet that the price will go higher by a certain date. A put option is a bet it'll go lower. People buy these options from big players. We call them dealers or market makers. And they're usually institutions or trading firms like Deribit. Here's the critical part. When dealers sell a ton of these options, they don't want to get crushed if they're wrong. So they protect themselves by buying or selling actual Bitcoin in the spot markets. This protection is called hedging, and it's basically like balancing a scale. If the price starts moving one direction, they add weight to the other side to keep things even. The word gamma just describes how sensitive that hedging becomes. When there are massive amounts of options close to the current price and close to expiring, gamma is high. That means dealers have to hedge aggressively with every tiny price move. But what's the result of that? Well, they end up fighting against big trends. If Bitcoin tries to rally hard, they sell to hedge. If it tries to drop, they buy to hedge. This creates invisible walls that pin the price in a narrow range. Right now, Bitcoin is trading around 88K, and it's been stuck between roughly 85K and 90K for a while now. That's not random. Dealers have massive options exposure right now, with heavy put support near 85K acting like a floor, and call resistance near 90K acting like a ceiling. Their constant hedging is literally holding the price inside this box, crushing volatility so they can safely collect premiums until these options expire. But here's where it gets really interesting. All those options don't last forever. They have an expiration date. And this week, one of the largest batches of options in Bitcoin history expires on Deribit, which is the main options platform. We're talking about $27 billion worth of Bitcoin options gone in a single day. That's more than we've seen on any previous expiry. When those options reach their expiration date, the dealers don't need to hedge them anymore. The walls disappear. The invisible cage breaks open, and it's like releasing a spring that was pushed down or shaking up a bottle of pop and finally taking the cap off. Suddenly, the price can move more freely, and volatility usually goes wild. The market gets room to breathe and follow natural supply and demand again. Now, here's something really important to understand about timing. The expiry itself doesn't guarantee an instant move the second it happens. A lot of people expect to see a massive green or red candle right at the time of expiry. And when they don't, they think nothing happened. But that's not how this works. What actually happens is the hedging unwinds gradually over the following 24 to 72 hours. Dealers don't close everything in just 1 second. The market usually chops around for a day or two as positions get settled and the new structure takes shape. The real move usually comes once the wider market realizes the pin is gone and starts testing where the natural levels actually are. Think of it like rush hour traffic when a major accident finally gets cleared. The blockage is gone instantly, but it takes 20 or 30 minutes for all the backed up cars to realize they can actually move again and for traffic to start flowing normally. The effect is real, but it happens over time, not in a single instant. So if you're watching this unfold, don't expect fireworks at exactly 8 a.m. UTC or whenever the technical expiry hits. Watch the days after. That's when you'll see if the market has real momentum now that the artificial suppression is lifted. And here's another example to make things even more clear. Imagine you're at a packed New Year's party and everyone's crammed into one small room because all the other doors in the house are locked. People can shuffle around a little bit, but nobody can really spread out. Then someone quietly unlocks the doors. At first, only a few people notice and start drifting out. Then more people see the open doors, and within 20 or 30 minutes, the whole party has spread throughout the house and the energy completely changes. That gradual shift is exactly what happens after a major options expiry. We've seen this pattern play out over and over. Look back at previous year-end expiries. In 2024, about $14 billion expired and volatility jumped big time afterward and the price wasn't pinned anymore. In 2023, there was an $11 billion expiry. That was the end of a quiet period and opened the door for much bigger moves. History shows these events work like reset buttons, clearing the board so the next real trend can get started. Now, if you're excited about this data and if you're enjoying this kind of breakdown, make sure to hit that subscribe button right now. It helps the channel massively and you won't miss any updates as we get closer and closer to December 26th. Subscribing is the best free investment you can make. Okay, now some of you might be wondering, why is this expiry getting so much attention? It's because the size is absolutely massive, something we've never seen before. Over half of Deribit's total options open interest rolls off that single day. Dealers have been defending their positions hard, which explains the choppy, frustrating price action we've been seeing. With trading volume thin during the holiday week, it's even easier for their hedging to dominate the market. After the expiry, all of that suppression is gone. No more massive forced buying or selling just to stay neutral. The market can react more naturally to actual news, ETF flows, institutional buying, or whatever else is driving real demand. Volatility trends come back in the picture, and price moves become cleaner and bigger. Here's the thing though. Events like this are invisible to most traders. They don't show up on your charts or your indicators. But understanding them is how you level up from watching the markets to actually reading it. And with 2026 setting up to be one of the wildest years we've seen in crypto, now is the time to sharpen your edge. We've been breaking down these exact macro factors, gamma dynamics, and sharing our moves in the FireHustle VIP Discord, helping people figure out things before the narratives go mainstream. The feedback has been incredible and everyone's been loving it. If you're ready to take things seriously, the link is in the description. Come try it out for a month. And with that being said, let me bring this all together. This expiry isn't just another day on the calendar. It's the moment when one of the biggest option expiries ever removes a massive layer of artificial control from the Bitcoin market. This choppiness we're feeling right now, this quiet before the storm, it's temporary and mechanical. Once those billions in options expire, the hedging pressure lifts and Bitcoin gets the space to move again, just like it has after every major expiry in the past. This is one of those rare moments where understanding the mechanics gives you a real advantage. This has nothing to do with guessing whether Bitcoin is about to go up or down. A Santa rally isn't a good enough explanation anymore. We're smarter than that. It's more about understanding what the reason is when the market suddenly wakes up and starts moving. You'll know exactly why it was stuck and why it's free now. Whether you're holding, trading, or just watching it from the sidelines, at least you now know the reality and can cut through all the noise. My plan is to stay patient, keep pushing when it comes to my research and trading, and work closely with my team in the FireHustle VIP Discord to hunt down all of the alpha. I know crypto moves fast and opportunities come and go very quickly, but if you're not ready for the VIP Discord just yet, then hitting subscribe is the smartest free move you can make to take advantage of all the work I'm doing. And before I sign off, a quick reminder, this video is for educational purposes only. It's not financial advice. Always do your own research before making any investment decisions. Thanks for watching, and I'll see you in the next one.